Alright guys, welcome back to another video. Quick context for anybody new here. At the start of the week, I outline what I'm watching from a macro and data perspective, what trades I'm planning and what I'm already in, and how I'm just positioning myself overall for the week ahead. Then at the end of the week, I come back and recap what actually happened, what worked, what didn't, and why. So we're going to go through this week, how it's going to play out, my options positions, and how I'm framing my upcoming week, especially with the economic calendar specifically in this week. Before I get into anything else, a quick note on gold. This was the trade we took earlier in the week. It did hit full TP with literally no drawdown, but I will be doing a full breakdown on this trade tomorrow. I don't want to rush through it on here. I want to cook up a separate video where I'm going to walk through the macro, the data, and the chart structure to actually give you guys an in-depth analysis on this position, because as you can see, we literally had zero drawdown on this and a full TP, and I'm done swing trading for the month unless something really presents itself. I called out the trade actually down here before anything else. I actually waited for a confirmation entry, which is why I only entered up here. So if you guys are following along, I'm calling these out literally every single week, and it's one, free sauce. Two, if you're paying attention and doing your own research, this is some free game. This is free trades basically that I'm calling out. But overall, I will make a separate video outlining everything. As you can see, we were just targeting the unmitigated high and the Asia high from the left, which also happened to be all-time highs. And as you can see, I was targeting this unmitigated high and this Asia high, which also happened to be the all-time highs from prior just to the left. I don't really like trading without a TP, so I could have held this for a lot longer and squeezed out like another 2 RR, but personally, I'm not interested in trading without a target, so I did take the full position off at this point right here. Gave me a really clean BE point as well, but I'll make a full breakdown on this tomorrow for you guys. So this week, I do want to actually start with the actual trades and how I'm positioning them for the week. This week is a little bit interesting because on the covered call side, we're switching to monthly covered calls, not weekly anymore. Weekly covered calls are paying around 0.02% per week. It's not worth the management. So by switching to monthly calls, I'm actually earning 0.4% per week with, fewer decisions, less noise, and better efficiency. So I can set my covered call position a lot higher, and I can kind of just let time do its thing and wait till we have that actual gain to these highs while I'm still earning 0.4% in premium each week. Same amount of capital, just a way better return on this. Getting into the cash secured puts, let's start with IREN because this would be the most complex position that we have on the table right now. So I have a very tactical play to potentially get assigned more shares and bring my average down. If assigned, I'll likely move my covered calls even higher on this, around a $60 strike, which would be up here. I just want to capture more upside on this stock instead, because I do have a covered call position right here at 53, as you guys know. My shares are at around 51.2 average. As you can see, we wicked above that today. But if IREN does come back down, I will assign myself 300 more shares at this point, and I will be targeting a lot higher. I do think this stock has a lot of room to grow. As you can see, we formed a lot of support zones at the lows here, and we just have a lot of ground to make up back to the all-time highs. So this would be a more interesting play for me where I am scaling into a position that I already really like. I do want this to expire at the end of the week so I can move this even higher and earn a lot more upside on the premiums here. Now, the next put that we have on the list here is on QCOM. This is an almost intentional assignment here. Yes, we had a huge sharp drop today. So yes, it is a bit of a catching a falling knife situation, but there are solid support levels below, as you can see, and resistance that is building above. If I catch the shares near support, I'm getting a massive discount plus roughly a 1% premium for the week with a very welcomed upside to this stock. So it's one of those things where this was a little bit risky. I had some bad fills today, and I'll get into that with another stock that I have on the list here, but personally with this, I did have this a lot lower just with the decay and stuff. I had to go a little bit higher, but that's okay for me just because, like I said, we have 2 support zones right here. So even if we did come down into between these support zones, I do have a good bias that we will just continue back to the upside, and I will earn a lot more if I have to sell a covered call on this. So now we have OKLO. This is an interesting pick for me just because of the stock itself and everything like that. But personally, I did like this pick because we're roughly 12% away from my current price. So we are currently trading at $102 a share, and my strike is at $89, meaning we have a lot of ground before we even get assigned on this, if we get assigned on this. So this one is one of those things where it's more of a probability play. I don't expect assignment, but if it does happen, we are sitting between 2 support zones with significant upside, and that's exactly what I'm looking for. With QCOM, I am looking for more of an intentional assignment, but with OKLO, I'm more so just looking for that probability play and not looking to get assigned on this. If I do, I'm not bummed, but I have a good plan for either way on this. Moving into more of a simple play, we have Hood again. I was selling puts on this for the last 2 weeks actually prior to last week. As you can see, we did have a good recovery, and then we came all the way back down, and we've created a good support zone at this area with a lot of resistance to the upside. So my thought process behind this is if I can get this at the lows, as you can see, like we've been hovering around this area for a while now. If I can cash it at these lows, I do think that we do have a lot of upside here. I am still pretty far away. It would be over a 5% discount getting assigned these shares. And at the same time, we do have a support zone right here where we would be able to, the plan is at least if we got assigned here, that we could just kind of make our way up, and then I could sell some tactical covered calls and make myself a good premium along with a stock gain. Nothing special here. This is just trading relative to its range and long-term potential, and I'm happy to own this at a much lower price if I catch that. If not, I earned a great premium on this week. Now, going into DXCM, Dexcom, this was interesting because I did have a pretty bad fill on this, but there is a lot of supports below, as you can see here. I'm comfortable earning a premium here, and if I do get assigned, I will just be riding this back to the upside. I did go in with a couple contracts on this, so we would be owning this pretty low in terms of where it's trading at right now. I do see significant upside with a lot of support below, so this does make me a little bit more confident. And if I do get assigned, the probability I would say is still kind of low, but the off chance that we do dump from all the way here down, I am getting in at a good spot where we do have significant support zones below that would carry me back to the upside where I can sell a covered call. Overall, everything is positioned mostly how I want it. Dexcom could have been a lot better on this, but I got clean premium capture and no forced decisions this week, so I'm very happy with how these are playing out. I'm just going to let time do their thing, with obviously the biggest thing being the monthly covered calls. From an options perspective, we are kind of ramping up on the weeks now. I believe last week was just under 1%, and now we're getting back over that 1% hump, meaning we're kind of getting back into full swing of things with 2026, and I'm looking to get pretty aggressive and make some great returns this year. Now, let's talk about the upcoming week and how I'm framing it using the economic calendar, and this is where a lot of traders overcomplicate things, so I'm going to keep this very, very simple. If we're hopping over to Forex Factory, we can see that we do have a lot of red and orange folders this week. And the only thing you need to take away from this week is the market is very focused on inflation, consumer strength, and how restrictive policy still is. That matters for risk assets, volatility, and positioning on any of your trades. Now, we do have a couple big names here, such as CPI. Obviously, that's going to be the biggest one. I'm not predicting any numbers here. I'm watching how the market reacts to this. If we get cooler inflation, that is supportive for risk and gold. Hot inflation obviously means volatility and pressure. So, I'm not going to be adding any aggressive risk before this point. I'm already out of that trade completely cleanly on gold, so there's no need to be forcing any other trades at this time. We also have PPI and retail sales, and this is going to tell us, is the consumer slowing, are price pressures easing or sticking? So weak consumer data plus cooling inflation also supports patience, but strong data means markets may reprice very quickly. So one thing I find very important, especially for my gold trading, is unemployment claims. Not a trade by itself, but it does add a bunch of context, especially for me personally. Rising claims equal cooling labor. Falling claims equals a labor market that is still very tight. This helps fine-tune my bias, but not flip it instantly. And then the rest of the week, we do have a lot of Fed commentary. I'm just kind of listening for confidence versus caution, their consistency versus mixed messaging. If they're all saying the same thing, I kind of know which way to look, but uncertainty from the Fed usually keeps volatility elevated in these risk assets. How does all this affect my execution? Because this data cluster, is one of those things where we have a lot of information coming in this week. So I'm not rushing any new swing trades. I'm going to let my options positions do the work this week, and I'll only add risk after the markets digest this information and then tell me which way I should be trading from a market structure perspective and from a data perspective. So patience is the edge this week, and I assure you guys, no trader has ever gone broke being patient. Overall, the big picture takeaway on this is when I zoom out, everything does line up. Options positions were conservatively placed during a strong equity push. Risk is obviously staying very controlled, and the upcoming week is so data heavy, so discipline really matters the most here. This isn't about trading more, it's about trading when it makes sense. But to summarize everything going into this week, I would say it's going to play out pretty clean. My premiums on my options were captured very well. Obviously, there's going to be no forced trades this week at all. And the upcoming week is really about letting the data speak first. And that is truly consistency. There's no need to be forcing trades at any point, let alone in a week where we are so data heavy. Let the market tell the story that it wants to tell. And, this is how we get such clean entries. This is how we get such clean TPs. It was like 7 p.m. on a Sunday, and I'm getting a notification that we slammed my TP here. And I'm like, oh, you know what? That's just really good positioning, and that is having a really good macro bias. And I want that for every single one of you guys that watches these videos. So to wrap this all up, this is what disciplined trading looks like. We're not predicting, we're not forcing, we're letting our macro, data, and positioning do the work. And I'll be back tomorrow with a full gold trade breakdown on this. And then we'll keep building from there. It's going to be a good 2026. We have our first big week of data, so I'm really excited to kind of get back into the full swing of things. Closing off the month of January already, with a fat trade on the month. I'm very, very happy with this. I'm very proud of this trade, and there's never any regrets with any of the trades I've taken, even if that was a loss. If you guys found value in this video, make sure to leave a like, subscribe, and drop any comments you have in the comment section below. And with that, we'll see you guys tomorrow with a gold trade breakdown.